What's going on, guys? Brian's here. Today is Friday, January 26, 2024, and the market is closed. In my opinion, this is going to be a very important video as we will be taking a look at a recap of this week's price action for the S&P 500 with a focus on the information available to us at the start of the week. So how can we come up with some sort of a game plan for ourselves at the start of the week? You guys know one of the biggest tools that I use is gamma exposure, so we will be taking a look at that. Here's an example of multiple different spreads that could have been run this week. I want to make it very clear. These are not positions in which I ran. I'm in the process of doing my journaling as I usually do at the end of every week. And often I like to go back and take a look at what I could have done better. What types of trades did I miss out on? The goal is to start the week with a systemized type of approach. The same information you take a look at, starting with the economic calendar. Then you move on to gamma exposure. Then you move on to maybe trying to identify some sort of pattern in technical analysis. And then you move on from there with other edge you have. The ultimate goal, in my opinion, is again reduction. How can you reduce how much time you're spending staring at all this overwhelming amount of data? Because there's, in theory, an infinite amount of things that you can look at, and there's an infinite amount of tools. But the objective, especially for the members of Quant Trading App, is to simplify your process. Everything that you guys see on this chart, by the way, here from these weekly levels, for those of you that might be watching this on YouTube and are not members of Quant Trading App, is available to us at the start of the week. So this is a script that is copy and paste into the Thinkorswim platform that plots all of these levels on the chart. So what you're seeing here is the weekly sell zone, weekly buy zone. We have our 2 sigma levels here. We have some intraday levels. We have some high positive gamma strikes, some high negative gamma strikes. We have max pain. So everything that you see on this chart, again, is coming from these Quant Trading App scripts. If you're unfamiliar with high gamma levels, there's a link in the description with previous videos in which I've done last month covering over the approach in which I have at the start of the week. This is just to show you guys at the start of the week, these are these high gamma levels that I'm referencing. These are my notes here. We'll go over in a second. And then this is the profile in which I built out for this week, just looking at Monday through Friday's expirations on the SPY, plotting them on the levels and coming up with a game plan for myself. So let's actually plop this open here. Let's make this larger. And then let's just start with some of the notes. So the SPY, the SPX is in price discovery. We're at all-time highs, so that means there's no previous resistance. Every time the market goes higher, history is being made right now. Again, there's no previous resistance. The objective is to not try to be the person that's stepping in front of a steaming train. You don't want to be the first person to try to top tick and short the market. You want to wait for price action to prove to us that it is weak before you make a decision to actually short, or some sort of other tool in which we're going to get to in a second. So here we have, as long as SPY remains above 480, there is little fear for bulls. So this is 480 right here. This is our key strike at the start of the week. If price was to pull back here, this is the level I was expecting to hold, and then with the opportunity to get long. However, price never retraced this week, as you guys saw in the screenshot before. Then we also have, this is the start of big tech earnings. We have this week and next week. It is not unusual for price to break the weekly levels for multiple tickers as the market digests earnings. This is pretty important to take note. This is an earnings week. So this is that top-down approach, starting with what's on the calendar for the week. This is almost us going back in time at the start of the week. So that's the point of this. This is Monday. This is 7 minutes after the market opens here. And then whenever I shared this, and this is 11 minutes or so after the market opened on Monday. So we're just jumping back in time and trying to walk through the thought process of what you can be thinking for how you're going to approach the week. This is my personal for myself. Broken wing long call butterflies keep working. So this is what I'm sticking to. It keeps working for me. It's been working for weeks, and I'm just going to stick with it. That's what I'm running. I did a video earlier this week. If you guys have mentioned, I will be referencing a couple of them. So here is the broken wing butterfly on the ES. I decided to share one for those of you that are below PDT and like to trade spreads or options after the market closes or pre-market. And then also I'll be referencing this Iron Condor management video here. So these 2 most recent videos, how can you apply information that was just expressed in 2 most recent videos and compound that with some of the gamma exposure information that you might have digested over the past few weeks from observing any of the type of videos which I've put on this YouTube channel. So these are our gamma levels. Let's just jump right down the list very quickly. This is the SPY. Again, the screenshot is taken as the market closed, so this is the end of the week. This is the end. This is the price action at the end of the week here. So from Monday to Friday, how price interacted with these high positive gamma levels. At the start of the week, you guys know I like to address where are the high positive GEX strikes, and then I take note of that. If we jump back to here, just so you guys can be clear, that's what this rectangle is right here. I just extended it out so you guys can see now that the week is done. I don't like to have too much on my chart while the market is open, so that's why I just put it here at the start of the week, and then I can extend it out as the days are passing on. so it doesn't make it too chaotic as I'm trying to pay attention to the actual candlesticks. But this is that same green level here. As we head over to what it looks like, this is that green level extended. So this is price holding the high positive gamma strikes as it should. Reduce volatility. We know what happens in a positive gamma environment, but even if you don't, let's just keep it simple. Let's think about these high gamma strikes. This is 485. It is addressed. It is marked off on our chart at the start of the week. This is a key area of interest. As long as the market is above 480, this is our dominant key strike right here. This is the highest positive gamma strike. This is the highest absolute gamma strike, XYZ. The annotation for each of these levels has been addressed in previous videos, and I don't want this video to be entirely too long, so I can't cover every single concept or things in which I've been addressing. This video is under the assumption you've been watching some of the previous videos and you're well aware of how I dissect or what I'm looking for whenever I'm trying to approach the market, or my approach to my decision making regarding trading. So here's our high positive gamma strikes in this area here. Here is the most significant one right there. Again, start of the week. That's what we have. Then let's also take a look at it. This is the information with the Quant Trading App scripts also on the chart. So let's just make this max. I just made that full screen. And here it is. We have our QTA weekly resistance level at the top, and we have our high gamma levels addressed from the gamma exposure profile created at the start of the week, and this is price action, everything layered on top of each other as the week ended. Now let's take a look at the SPX. Similar situation. This is the same thing right here. So we have a couple main things to address. We're going to get to Wednesday's price action here, and right now we're still at the start of the week on Monday as you're trying to figure out what do you want to do. These same levels are available to us. What do we have here? We have 4,900, a very significant strike, as we'll take a look at in a second. We also have the RUT. We'll be getting to that. We have the IWM, which is the SPY equivalent of the Russell 2000. So the same way the SPY is 1/10 the size of the SPX, the IWM is 1/10 the size of the RUT. And we have the ES, something that was covered in the previous video at the start of this week here. So this is our demand zone left over from last week. So again, just going right down the list, this is the start of the week, the information we have available to us. Now let's jump into how can you actually use this information to trade. So we're starting with Monday. This is the gamma profile from the start of Monday here. The market opens, and this is 9:30 Eastern time. Let's just say 9:45. You decide to wait 15 minutes to 30 minutes to see what is our gamma profile looking like. The SPY is at 485. It is a massive gamma strike right here, and it is smack dab right in the middle of the high positive GEX strikes. So 490 by high, you guys can see this one sticks out right here. Here's 490, here's 485, and on the low end here we have some high gamma nodes right in this region, so we can say 481. We might as well round this down to 480. So if I just clean that up, we have 480 to 490. You guys see this right here. I'm just drawing a rectangle around what pretty much covers, I'm just eyeballing it, what covers, let me make that a little bit cleaner actually. Let's go 480 to 490. So here's our rectangle, and this is me just eyeballing it. There's nothing too scientific about this. I'm just taking a look and saying, hey, these levels right here, this is higher than, if we want to call 10 million as the baseline. We're just selecting all of the gamma strikes over 10 million because 10 million looks like, you know, from this profile, this screenshot, this point in time, anything over 10 million looks to stand out. So I'm just going to say, hey, let me just cover this entire area and see what strike prices I have. I have 480 and I have 490. So right off of the back, if you're looking at a directional type of trade, you don't really have much of an edge right now because price is right in the middle. It's in the middle of two very dominant areas. If price is at 490, you can think, hey, maybe this area should act as some sort of resistance and price is going to revert back to 45. The same thing, if price was to come down to 480, you might tell yourself, hey, this area is probably going to act as a support. Price might want to bounce back to 485. But while it's at 485, it's very hard to say you have some sort of a clear directional edge as price can go anyway. If we take a look at the SPX now, this just say this is 10 a.m. So we have, this is before the market opens, and then we have 10 a.m. So 30 minutes after the market opens Eastern time here. Where's the SPX? It's at 48.67. What is our high GEX nodes? We have this right here. This is sticking out at 4,900. And then on the lower end, we have this one here. I'm just paying attention to the positive gamma nodes. We have 48.20. We have 4,800 as the absolute GEX. So this inherently is going to be a very powerful strike. So we can say 4,800 to 48.20 is potential support down in this area, right? And then on the upside, we have 4,900 probably up to 49.25. This is an area here. So I'm going to draw two rectangles again around these two ranges. So 4,900 up to 49.30. And then on the lower end, we have 4,800 up to about 48.25. And I'm just eyeballing it. I'm not being too scientific about this. I'm just, basing it off of this profile and saying what sticks out to me. This sticks out, this 4,900, because it is the largest positive gamma strike on the list. What I would expect if price got up to this level is it's likely to act as some sort of resistance. So that's why I'm going to give it a range around this entire area, because there's a lot of positive gamma out here. I'm seeing this blue spike in the background here is letting me know this is a decent spike 30 minutes into the market open for the weekly expiration. This is the 5 DTE, so this is the expiration that expired here today, but we're going back in time. We're taking a look at what this looked like on Monday at 10 a.m. Eastern time, and there's already a decent amount of speculation that's starting to come into this 49.20 level. So we're going to tell ourselves, hey, if someone's interested in 49.20, and let's monitor that. Let's take note of that. We want to be aware of these high positive gamma nodes. So there's the possibility that price might try to rise. It might struggle around here, but if it breaks 4,900, there's a possibility that it goes to 49.20, because this is our next levels of potential resistance. On the other end, if price was to sell off, what's our first level that sticks out? We have this level right here, 48.50. So we tell ourselves, hey, if price gets below 48.50, where is it likely to meet some sort of support? In this area right here. You guys should know at this point, when there's a lot of high positive gamma, when price drops back to right where the negative gamma starts showing off, in this area is generally going to be where there's some sort of a gamma flip level. This is where price tends to get pretty sticky, and it's not going to want to just slice right through this level. You're going to have some sort of a breathing room as price action is going to be digested. For us as traders, that just translates to potential support down here. This whole area, it looks chaotic, it looks messy. If we take a look at this, this is down, this is up, this is down, this is up. We can almost say this area looks choppy on the gamma profile. If this area is choppy and we're in this positive gamma environment, that means as price sells off and it comes into this area, there's a nice range here where it might meet some support. Forget what you might think about market makers and advanced algorithms and all that other stuff. Don't try to understand every single nuance of what's happening here. Just know, reduce it to yourself, try to simplify it as best as you can. This looks pretty choppy. What's going on here? I have no idea what's going on in that area. Maybe no one knows either. That means if price sells off aggressively, price might take its time in this area to figure out what's going on. It has to digest and move through what's going on here because of all this high positive gamma. Again, all that translates to, for us as traders, if we keep it simple, it's potential support down here. I'm going to make this a different color here. It's potential support down here. And then we have potential resistance up here. That's all we're trying to establish at the start of the week. If we take a look at the QTA levels, let's also see what else coincides with that. What do we have? 4,900 up to 4,920. Here's our weekly sell zone. And then what do we have as the potential support side? We have 4,800 as a level that sticks out to us on the gamma profile. We have our buy zone down here for QTA. So this is 47.90 down to 47.80. We can just say this entire area, but we're not so concerned about down here because for now, price is holding above support levels. So we don't have to be too worried about to the downside yet. Let price show that it's weak, but at least we have some sort of confluence to the upside. So we're starting off with being aware 4,900 is some sort of a significance. As we can see on the gamma profile right here. Here's our 4,900 strike. It is the strike that is sticking out the most to us. It is also a strike that is sticking out on the Quant Trading App script. It's letting us know this area, again, from the start of the week, this area, this level is already drawn on our charts. So it is letting us know, hey, the market might reach some sort of potential resistance up in this area. Go look for some sort of additional confluence. In this case here, as price gets to this level, you wouldn't even really need to go look for additional confluence because you already know from the start of the week that 4,900 is a high positive gamma strike. The levels are actually drawn on your chart on a Monday. I don't have a screenshot from every single day of the week, but you guys are in Quant Trading App know the intraday script updates every pre-market, so it's already drawing these levels on our chart. So on Monday, you are already aware of this. So now let's move on to the second half of this video. We asked ourselves, what can we do with this information? And this is where I just want to cover some of the types of spreads for you guys. By the way, this screenshot right here, everything that's on the screenshot is in terms of one lot. So this is not sized up. In other words, this is not because there's 10 contracts. This is one iron butterfly on the RUT. This is one bear call spread here on the SPX. So let's take a look at a double calendar. This is a double calendar, and you're just targeting these high GEX strikes, which is 4,900 and 4,800. Nothing too entirely scientific. Also making this clear, this is not trades in which I've taken. I'm showing for multiple different account sizes, multiple different styles of trades. I'm trying to address all sorts of different thoughts that might pass through a person's mind at the start of the week. This is generally how I might approach the week. I love calendars. I love double calendars. So I might say, hey, what's a double calendar going for? I know with experience, $4.50 for a double calendar at the start of the week, about this wide, is a pretty good price. Sometimes I've seen them for $4, but anywhere between $4 to $4.50 is generally going to be a decent price, even upwards to $4.75, depending on what time on the Monday you decide to enter the trade. At this case here, we know at the start of the week, the SPX is somewhere around here. So you're just opening up the week saying, hey, we're probably, maybe we gravitate towards the high positive gamma strikes at 4,900. Maybe we head back down to the absolute GEX strike. I have no idea, but for 450, I'm willing to stick it out and see what happens. So the high GEX at 4,900 and 4,800 in confluence with the QTA weekly levels is additional confluence. In other words, what I mean by that is, let's take a look to the downside right here. So let's pull up the QTA level. We have 47.90 on the SPX down to 47.80. So this is our potential support. We know if price gets down here, it's probably going to stick around here for a bit. It can break the level, of course, but it usually balances out in these areas for an hour or two, sometimes even 3-4 hours. Price might consolidate in these levels before it decides what it wants to do next. So 47.90 to 47.80. Let's take a look at that double calendar. 47.80 to 47.90. That's right in this area here. So we'll just say 47.80 right in this region. So as price is somewhere around here at the start of the week, if price was to sell off down to 4,800 and it breaks 4,800, we know what's down here. We have the Quant Trading App buy zone. So this is our region to say, hey, if I'm structuring my double calendar, I want something that's probably going to cover the absolute gamma strike, but maybe have some sort of next level in mind that price might go down to. And that in this case is 47.80. So you know you have some sort of support in this area. So you're going to tell yourself, hey, if price sells off and it hits here, maybe it hits this level, it bounces and it hovers around here for a couple days, because that's all I might need to hit some sort of a profit target. All the screenshots that you guys see are going to be covered from around close to midday Eastern time here. So I was just taking my screenshots here again as I'm journaling out for the rest of the week, and I'm just deciding to share this publicly for you guys, so you guys know at the end of the week, not only will I journal some of the positions and trades which I take, but also, if I have the time, like to go and see what I could have done better, what I could have missed, and then I add it in my folder, so the next time I see a similar situation, I can go back and reference, hey, how did that type of spread perform the last time? And maybe I can choose a better approach to the week. And better for me is not always what trade made the most amount of money. Sometimes it's the trade that didn't really give me the most headache. It's also the trade that I didn't have to do much managing. And it was also the trade that I was comfortable just leaving alone. And that, in my opinion, is the ultimate goal. The start of the week, I would love to open up positions and just leave them alone for 3 days. And then I hit my profit target. If I have to hold until Friday, I prefer not to, because sometimes it can be pretty nerve-wracking. As you guys can know, anything can happen on a Friday. And it sucks to be up on a trade for 3-4 days straight. And then in one day, you just watch so much of your profits evaporate. So in this case here, the calendars, I took the screenshots here at 11:23 Eastern time, because calendars, you don't really want to hold them until power hour on a Friday. The term structure is we are short the Friday expirations and we're long the Monday, so keeping it pretty tight. Standard double calendar, if you have a smaller account, this is something that you can definitely trade. Let's take a look at the P&L for this trade. So at 4:55, this is here at 10 a.m. Eastern time on Monday. You guys can see the drawdown is not really that bad. It probably hit about $4. I think I put it in the notes up here. The drawdown was about $3.93, so the biggest drawdown was 57 cents. So if you're in 10 of these, that means you're down $570. If you're only in one of these, that means you're down $57. So down 57 to be up 300. If you have a larger account, you guys know my sweet spot for these types of trades is anywhere between $4,000 to $6,000 in margin for the week. So this is the type of size that I would generally trade something like this with. But you guys can see here, again, scale up, scale down depending on your account size. This means this trade is down less than $500 to be up over $2,300 by the Friday. And Again, I'm using the worst case scenario. So that was the max amount of pain received in holding this position is down less than $500 to potentially be up thousands of dollars by Friday. That is the calendar. So take note of this, see how this performed. Now let's move on to something a little bit more conventional, like an iron condor. It's the start of the week. You have no idea which way the market's going to go, but you know the levels because 4,900 is our key strike that we've been discussing. We also are aware of the levels above that, 4,920, and then to the lower end, we have 4,800. So this is our conservative range, 4,800 to 4,900. This is our range. We're going a little bit wider because it's the iron condor, and we're expecting some sort of consolidation or choppiness in this region. And if price, hits one of these levels, you'll adjust accordingly. You can check out the iron condor management video in which I did last week addressing what I do if price rallies to the upside. But this is just simple, same thing. 10 a.m. you're just running a standard iron condor. The maximum drawdown was $1.95, so that means this position is down about $200. By the end of the week, it's up 345. You guys know with iron condors, that's the nature of the beast. Sometimes you have to be willing to hold down a little bit more before you hit your profit targets. However, this is pretty important here. Profit target was actually hit this day before. This is on Wednesday when the market actually hit the sell zone, where it actually hit 4,900. So that's why there was problem here on Wednesday. You're actually more than likely out of this trade here the day before. So this is from Monday to Tuesday. The iron condor went from $5 to around 250 or so. So you're up $250 within a couple days. That means this is a trade from multiple different account sizes, $250 from an iron condor. In contrast, again, you can compare these types of spreads. On Tuesday, the double calendar was actually red. So sometimes I prefer the iron condor if I'm looking to get out of the trade a little bit earlier in the week. Double calendars, you will likely have to hold until Thursday, sometimes Wednesday, to actually get a decent profit out of the trade. So that's something to take note of. If we move right along, this is the call broken wing butterfly. This is a little bit more advanced, but this is the types of spreads that I'm running more frequently now, as these are the trades that I am in preference of doing because they have a very high win rates. They do tie up a lot of margin, but I'm just trying to adjust this. Again, all these screenshots are taken today around the same time. So this is at 11:36 a.m. Eastern time here. This is the approach of understanding, hey, the market is in a net positive gamma environment. There's a lot of gamma exposure at 4,900. This is the region I would like to target for this week. However, if I am wrong and the market goes down to 4,800, I don't want to lose any money. So I have no risk to the downside. There is some risk to the upside if the market does go too far. So that is a little concerning when you run these types of trades. So what was the largest drawdown? In this case, $3.85. So down $385 to be up $500. Let's take a look at what the P&L curve was for this trade. Let me just make sure I'm opening up the right one. Here we have it. So $4, $5 we'll say is how much you're receiving opening this trade in credit. Same time, 10 a.m. Just trying to standardize the opening time for all of these trades as we compare each spread to the next. By the Tuesday, you guys can see here, the trade was going for around $2, $2.50 or so. So actually already up $250 before being down on Wednesday. And then ultimately, of course, on Friday doing well. So that means about 48 hours or so being in the position, you're not really experiencing any pain as it's relatively painless and working itself out. In this case here, the trade ended up being up to $500. I think by close, it was probably up, probably a couple hours or so after this, it probably was actually up a little bit more, but that's nitpicking. Let's jump right along. Long call butterfly. This requires a little bit more risk. You have to have a little bit more of conviction in my opinion, but you guys know I love these broken wing long call butterflies. So if we jump back to, as I addressed here for myself, broken wing long call butterflies keep working. And this is Monday morning at the start. So these are the trades that I'm interested in. This is a broken wing long call butterfly here. I have no risk to the upside. I don't care how high the market goes. I just want to base my break even off of a support level that makes sense. So this is 48.32. Where did I get that level from? Let's take a look at the SPX. 48.32. So right below, this is last week Friday, right below last week's Friday's consolidation here. What made that stand out to me? Let's take a look at the ES. Here's our volume profile. This is the high volume nodes. This is the demand zone that was created from last week. This is that point of control. If you haven't seen the video in which I've addressed here, this is the volume profile butterflies. This video was released on Tuesday. I recorded it on Monday, showing you guys the long call butterflies that I was doing in the the ES this week, and this is the big brother to that. So it's the same trade, essentially same logic, everything in which I've addressed in that video, same thought process. I recommend you guys check that video out. But this is just saying, hey, for this week, as long as the SPX remains above this price, this trade is going to be profitable. How much? I don't know. If the SPX went nowhere for this week, it would have been a pretty nice win, $1,800 in profit. However, regardless of how high it went, the trade is going to make $800. At its lowest point, what would have been the max drawdown? $3, as you guys can see right here. So let's pull up the price history. This is the trade being opened 10:30 Monday morning. This is the drawdown right here. And then from there was relatively smooth selling. If we take a look at price action on the SPX, this is it here, opening up as the market is actually showing some sort of strength, and then the market retraces, but it never broke back below the important levels. So as you're opening a position like this, you need to be aware of, you have to ask yourself, hey, where am I going to stop out? If price gets below an area in which I do not think it's going to go below, then you take your stop, and then you use your risk profile to assess how much will you be down. If you're going to be down $500, if price got down here, then you know that's your risk. It's going to be $500 per one of these types of trades. If that's too much, then you know it's not a trade for you to run. So these two positions down here are a little bit more advanced, but this is the realm in which I'm living in right now as I'm pushing myself as a trader. These are the types of trades in which I ran more 3 years ago, 3.5 years ago or so. These are the trades in which I ran more 2 years ago. But now I'm living in the broken wing butterfly column. I'm pushing myself to run more butterflies for a credits. They're very uncomfortable considering how much margin I use if price is going in the wrong direction as soon as you open it. But that's part of the growing pains and the adjustments at the start of every year. I try to dedicate Q1 to pushing myself, feeling uncomfortable, to get a little bit more familiar with newer size, larger positions, and that kind of sets the trend for later in the year. Even if Q1 I take a hit, at least for the rest of the year, I would have learned something, and then I have a new toolkit in my belt. So these are not trades I'm comfortable sharing with you guys that are just in Quant Trading App. Even if I'm sharing it sometime as I open the trade, I will try to address this is not a trade I recommend someone that does not have any experience trading broken wing butterflies, especially for credits. These are not the type of trades I would recommend you start off with. Now let's move right along to something a little bit more conventional. Here is an iron butterfly. This is the start of the week. Same thing, 10 a.m. after the market opens, you're not picking any direction. You're just telling yourself, hey, I don't think the market's going to go anywhere. So you just open it up Monday morning. So we have the largest drawdown was actually today at $6, so minus $600. However, prior to Friday, the largest drawdown, this would have been on Wednesday, was $3.23, so $323. But not before the position was up $4.75 on Tuesday. So the position was up almost $500 on Tuesday. Let's take a look at the P&L curve. This is the position being opened here on Monday around 10 a.m. Eastern time. So 30 minutes after the market opens, the market is doing whatever it did on Monday and Tuesday. Price action was very choppy. It was disgusting, which is great for these types of spreads. So this is the P&L just going nice and up. So this trade would have been up close to $500 by Tuesday. So yes, there was a drawdown, as you guys can see here. This is the drawdown on Wednesday. So the position was open here, then it started to draw down, then price recovered. So there was another opportunity to also be up $500. And then the largest drawdown here was on Friday, early in the morning here, as the markets did push past 4,900, but then it ended up getting rejected. So I think by close, this trade was actually profitable as the SPX closed. Let's see where we actually closed. Closed at 48.90. So if this position was held until close, which is not encouraged, it ended up closing right around here, 48.90, which actually means this trade was green by the end of the day. But I don't think anybody in their right mind would hold something. This is what I consider volatile for P&L. If you're going from green to red to green to red to green to red on the day of expiration, then I would not encourage, holding these types of positions for that. If you're green this much in a couple days, you take that type of profit. If you go red on a day like this, chances are you're adjusting around here. And if you're not, the moment you go green, you definitely want to take profit. You want to avoid the stress that you'll go through holding these types of trades for too long. Let's move right along before we get to just these are some positions for Wednesday, because those are our significant days. We have Monday at the start of the week. The only other major significant form of price action, in my opinion, is when the SPX hit 4,900. Everything else, nothing here was really significant regarding price action until we hit 4,900. So this was the next day to do something. These 2 days here, if you're not running iron butterflies, iron condors, or you're running broken wing long call butterflies, or any other advanced types of trades in which I'm running, there was nothing indicating a clear direction in price action. And that's something you want to be aware of, especially as a new trader. Don't force trades every single day. There's nothing here for you if all you do is buy calls and buy puts, or you're looking for, a big move. The momentum is not always going to be here. The market just made a really nice momentum move from Thursday and Friday of last week. It's going to consolidate for a little bit. These are the couple days here that you want to sit on the sidelines if you're that type of trader. So this is the next time for you to really act, which would be the Wednesday. But let's take a look at the RUT for a second. And here we have the RUT. So what does the RUT do on Monday? It rallies straight into this region. Let's take a look at the IWM, which will sometimes paint a clearer picture. IWM rallies straight into the QTA sell zone. So we have the IWM and the RUT. So IWM and the RUT. What do you guys know from the previous video in which I did? So this one right here on adjusting the Iron Condor management. If you're in QTA, then you should definitely already be aware of this. If you're watching this video on YouTube, then you guys should be aware of this. Why did I choose an Iron Fly adjustments last week when I ran an Iron Condor and I was actually in trouble? The trade went really wrong pretty quickly within the same day in which I opened it. I turned it into an Iron Fly for reasons explained in that video. And I think someone asked, one of the reasons why you don't have to rewatching it. You guys can just pause this video right here, and then I believe the answer will be right there for you guys. But as we come back to this right here, that is the reasoning for that. So that means if I'm not in an Iron Condor and price rallies straight up to the QTA sell zone, and I know we're in a net positive gamma environment, the IWM is also net positive gamma exposure. I'm expecting reduced volatility, which I'm going to translate to price being choppy within this region, which is going to translate to something like an Iron Condor or an Iron Butterfly. On top of that, 495 was very important for the IWM this week. I didn't have that screenshot prepared, so let me just see if we can find the IWM right here. And let's just jump back to earlier in this week. This would be the 22nd. I can pull it up on the Quant Trading App sites, but for now, this will just be quicker. So let's see right here, 10:30. All right, what do we have? 195, absolute gamma, 195. Again, this is not, but I didn't know that at the time. No, this is information that it is at your disposal. It is information that you can look up, you can see, and you can be aware of. 10:30 Eastern time. Where's a ton of gamma on the IWM? 195. We also have some significance at 200, so that's something to be aware of. But for the most part, this whole area looks like a mess. I don't enjoy looking at gamma profiles aside from the SPY and the SPX because some of these other gamma profiles look hideous to me. I'm so used to looking at the SPX, which one can argue looks beautiful. So, for example, we come and take a look at how much more, in my opinion, this is so much more aesthetically pleasing than looking at something like this looks like I don't know, but it's something you want to be aware of here. But price is likely going to stumble or struggle right around here because these are the next nodes that stick out, and then if it cleared this area, then it would likely run up to here. So it's just something to be aware of. But trying to avoid every single nuance in a recap video because each of these topics deserve their own video. This is the 195. Even if you're not looking it up, the Quant Trading App plots these levels on your chart. So on Monday, definitely on Tuesday, these levels are on your charts. This is the high absolute gamma strike for today at the start of the day. That's why this purple level is here. This is the high negative gamma strikes. So you don't really even need to go look up the data in these gamma profiles or run the report. The information is on your chart. That is the point of the scripts. So if I see price is around here and I'm thinking, hey, price is probably going to be choppy around here, the trade that's going to come to mind is an Iron Fly. It could be an Iron Condor or it could be an Iron Fly. Either or, take your choice. If I'm going to be very aggressive with the premium, I'm going to run some sort of an Iron Butterfly, and this is the same thing you should consider. So this is Monday morning, 10 a.m. Eastern time. How much is this trade going for? $28 in credit. The max loss about $1,200. Let's look at the P&L curve in a position like this. Opened 10 a.m. Eastern time, and it was just smooth sailing, continue to go up as the IWM could not make up its mind. It was just going choppy. These trades are not going to work out 100% of the time every single week. The objective of this is when you do your analysis, when you do your reviews, when you do your recap, what did you miss? What can you take note for the next time? And what type of possibilities can you be aware of? If this type of price action occurs again, this is how much profit can be made from this information. If there's that much amount of gamma around these high areas of interest, what type of trade am I going to run? What am I going to expect the next time? So that's from Monday. So all these different positions are all executable from 10 a.m. So 30 minutes after the market opens on Monday, just starting with, again, the information that we have within those first 30 minutes, even an hour before the market opens, you can already be trying to analyze what you think can happen. We started off by saying, hey, you have no idea what's going to happen. You're just picking some calendars, or you're running with an iron Condor because you're completely non-directional, non-discretionary. We're looking at iron flies, which would have underperformed on the SPX if you opened it right away compared to everything else in which we're looking at. But you guys can see for the first couple of days, the trade was actually green. So you're hitting your profit target on a Tuesday, and then you can be actually probably done trading until Wednesday, when the market is telling you, or when the tools within Quant Trading App are telling you, hey, it's time to act and maybe do something again. So as we move right along, let's take a look at Wednesday now. What type of options do we have, or things you should be thinking if the market hits this key gamma strike of 4,900 with confluence of the Quant Trading App 4,900 level? Maybe a bear call spread. This is selling a call higher than the resistance. So if this potential resistance is 4,900, anything higher than this, it's fair game in a sense. And this is what that trade would be looking like at the time. Max loss, $670, because you're collecting $330 in credit. You use your own risk management system. If you're going to collect $330 in credit and you're looking to possibly collect 50% of that, that means you're looking to walk away with about we'll call it $175 in profit, give or take $10, 10 cents or so. So $150 in profit. Maybe your max stop loss is, maybe if you're down $3, you're going to cut it from there. Everyone has their own different way of managing their vertical spreads. That all comes down to what you're comfortable with. But in this case here, if we take a look at the P&L curve, there was really no means for management because the trade just worked out straight away. Market hit that level and then it was rejected. Even when it tried to go back to 4,900, the nature of these verticals is time decay is eating away at these options. And that's why they're very favorable amongst options traders that are used to trading complex orders like butterflies and calendars and all the other types of option strategies that are out there. This is one of the more simpler ones, a call credit spread, also called a bear call spread. If you want to reduce how much margin you're using, this is the same thing, but just making your strikes a little bit tighter. So this is only 5 points in separation right here. As you guys can see, we have 20 and 25. This is only using $500 in margin. You're collecting $180 in credit. And as we take a look at the P&L, we can see 180, no real need for adjustments as the price just was choppy and then it rejected the level and things just worked out pretty well. Again, if we take a look at price action here, this is at this moment in time. Price hits 4,900. We can take a look at it earlier in the day here too, but I'm just using either or. It doesn't really matter. Price hits the level. You're aware of it from Monday. You know what's going on up here. You know the level up here is also something to be aware of. If you guys were in chat this week, you guys know 49.20, 49.30 were the other two levels in which I had my eyes on. I had a broken wing butterfly targeting up there if price was to continue rallying. I'm trying to refrain from discussing the positions in which I shared or positions in which I took. This is just a recap of what you can be thinking and how you can trade and what you can take away from a video like this and pick the spread or pick the strategy that matches your personality, matches your account size, and matches your risk tolerance. As we move right along, here's an Iron Butterfly. So this is the Iron Butterfly now opening on the Wednesday as the market hits the weekly resistance with the 4,900 high GEX confluence strike. This Iron Butterfly's credit collected $29. The most amount of pain this trade felt was $1.60, and that's all on the Wednesday. So that's you opening in this trade right in this area here, and you're telling yourself, hey, I just think the market is going to be choppy around this area now. Same thing. It could have been last week. You watched the video I just did on Iron Condor adjustment, what my thoughts are when the market hits the weekly sell zone, when we're in a net positive gamma environment, when bulls are clearly in control, when we have clear, strong demand and support levels below us. The expectation being when price sells off, buyers will be here because buyers are in control. We're in a clear bull market. We're putting in new all-time highs. So there's some sort of security in thinking, even if we reject, price is probably going to bounce. There's no real need to panic or be fearful unless certain levels give out. And that's the point or the purpose behind when I plot my notes here, or I might say something here. There is no real fear, in other words, for bulls. There's little fear for bulls. This is the start of the week. I don't think there's a need to write a 200-page report at the start of the week on every single thing that's going to happen. At this point, it's being reduced. It's very simple. Markets in price discovery, there's no previous resistance, there's no fear for bulls. And this is something that I've been repeating for the past 3-4 weeks or so. As we head back to possible trades to take, the Ironfly, let's take a look at the P&L curve. This is the little bit of the drawdown here. Nothing too crazy within the same day here. So this is around 3 p.m. or so, the same time Eastern time. And then it recovered, and then you guys can see it was relatively smooth sailing, especially towards the end of the week, because that's the nature of the Ironfly. So look at these types of profits. Look at the drawdown here, risking, call it $3 on a trade like this to potentially make $900. You're obviously not holding for this profits. It actually ended up making, if we head here, I took the screenshot just before the market closed, so you guys can pause this here and actually look how did each of these trades actually perform by the actual close. You guys can see that the Russell actually ended up being $2,500, even though when I took the screenshot it was $1,800, so it ended up making another $600 just from an extra a couple hours of time decay. And as we move down along here, the Ironfly is actually up $1,800 by the close. So when I took this screenshot here, this was later in the day, as you guys can see. So this is a 3:51 Eastern time, so 9 minutes before the market closed, because these are the positions that would have been theoretically open on a Wednesday, or at least considered on a Wednesday. Let's take a look for small accounts, the XSP. Last week, you guys know I ran a bull put spread on the XSP when the SPY/SPX hits the Quant Trading App buy zone. So this is the same thing where we were looking at on the SPX, but in this case, we're just using it for smaller accounts, less margin, less risk inherently because it's smaller size. You scale up or scale down. This is your max loss. This is your profit targets. Really high probability of success. P&L curve in this case here, there's no drawdown. We can ignore this. That's just the nature of the XSP right now. As the market opens or after hours, it's going to be some sort of fluke activity, as the XSP's options are still relatively new. But for the most part, during the market open session, there was no drawdown. 71 cents received, and then theta started kicking in immediately, and by the close here today, obviously it expired worthless, meaning you're collecting 100% of the credit. There were so many different opportunities, so many different types of spreads. At one point, I even came in and again, this video is not showing all the trades which I would have taken. Some of you guys already are aware of the double butterflies is what I had to manage from last week's Friday that I swung here. These are the broken wing call butterflies, again, targeting this same region right here, showing you guys why. This is for the 0 DTE in that case here. And let me just point out, here's our demand zone. Again, early in the week, we're aware of these demand zones. And lastly, I think the whole point of why I came to here, just to wrap with this, I have too many SPX positions ready open for this week. But if I didn't, I would be thinking about a twin fly just like this. So I'm just going to track it on option strat. So here's another opportunity, just targeting around these high gamma strikes. And then if price, closes in the middle, you adjust. Obviously, you assess the trade. You have to come up with some sort of plan. What happens if X level breaks? What happens if another level doesn't break, and so forth. But as we scroll right along, let's see how that one even ended up working out. I think I ended up sharing here, and I said, damn, the twin fly ended up being a home run. I wish I ended up running it too, but there was no more room on my risk profile to open up any more spreads for this week. This is to wrap. There were so many different types of opportunities, just capitalizing around what you guys already see on your charts. And by I mean what you see on your charts, here's our QTA levels, here's our high gamma levels. Only 2 days to make decisions: Monday, Wednesday. Very clear decision making. I was asked on Wednesday, I was asked on Friday, what do I think? What are the markets going? I have no idea. This is not directional trading, in my opinion. This is horrible. I can't even stare at this type of price action for too long. As long as price is above 485, bulls are feeling pretty good. They're pretty confident. I'm expecting price to be choppy in this area, so I'm going to run something non-directional. As long as price remains above here, I'm going to have some sort of a bullish bias. If price breaks down below this level, then my bias will change. We're not in the business of trying to predict what's going to happen. We're in the business of managing our risk and making some sort of analyzed decisions with what we're going to do with our money and make some sort of profit. In this case here, this is the information, again, we have at the start of the week, guys. Take it slow. This video might have been a lot because I just threw it all together. And obviously the assumption is that you guys are already aware of all sorts of different types of spreads. This video is obviously catered to people already within Quant Trading App, so you guys have a feel for exactly what style of trading I take. You guys already have some sort of a feel for how I look at this type of information. I'm not staring at the gamma exposure all day long trying to pick apart every single tick what's happening. No, at the start of the week, I did my analysis. I'm waiting for when price gets to another significant level, and then I'm going to act at that point in time. Everything else in between, I'm trying to capitalize off of time decay or unless I see some sort of strong conviction or some sort of strong directional edge. We had some backside weakness on the break of VWAP here on Wednesday. That was a decent trade. We had some backside weakness here again. And then we had some backside weakness here for potential short trades here on Wednesday, Thursday, Friday. But these trades are not big trades that you can really, sink your teeth into, which is usually the type of trades I try to target. Hopefully, you guys got something from this video. It's been a while since I did a full recap like this on the week. Think of it more as what could have been a live webinar. Decided to just, take some screenshots straight from my notes, just press record, put together a video, upload it, and hopefully you guys have something you can take away from it. Thanks for watching, guys. Let me know if you have any questions. Links to previous videos are in the description, as well as the link to Quant Trading App if you're interested. Thanks for watching. Catch you in the next one.